So, Brett, you have probably the most access to the institutional crypto space in the world, and I don't think that's an exaggeration. So you're probably the best person out there to ask. We got the ETFs this year, and everyone says the institutions are coming. It feels like this is the first year they're actually coming. Can you just maybe set the scene for us and give us like lay of the land, what's actually happening in the institutional crypto space?
Thank you. What an intro. Psyched to be here, and thank you for spending the time with me. Gosh, I joined 4.5 years ago to try and build this institutional business, and pursuing all of those relationships and trying to get the world's largest asset managers to announce their involvement in this space was a hell of a task. It was years and years in the making, and in between when we started and the moment this year that they came, we actually had a few interesting things that happened with some implosions and some market softness. So you can't underestimate the significance of having BlackRocks and Franklins take their brand names and really endorse crypto. It's just amazing for crypto. Happened to be pretty good for Coinbase too. We won a bunch of mandates. But the most significant thing really about the ETFs isn't so much the $17 billion that's come in, which has been nice to have in the Bitcoin space, but it's really the fact that it opened a distribution channel. So if you think about the profile of the people, largely probably retail at the beginning, that opted to buy some of those ETFs, they're probably unlikely to be in the audience here, probably unlikely to be opening a Coinbase account themselves. So the access, opening up the access to crypto is really a hugely strategic moment for us. And then we've seen evidence of more institutions coming in. So we see a handful of pensions have come in, and usually they're the last client segment to activate. So really important moment, and really sets the stage for making other institutions who haven't entered the stage, haven't entered crypto, think through, like, what's our plan on crypto? Are you sure we don't want to be involved? So anyway, big moment.
Okay, lot to unpack there. There's the big capital allocators, pensions coming in. There's improved brand and trust in crypto again. There's kind of the stamp of approval. Maybe we could talk about the rollout phase of these ETFs, because to me, someone who knew nothing about ETFs a couple of years ago, it felt like, okay, once they turn on the ETFs, we got the ETFs and we're good, and all this money's going to flood in. But as you've explained to me in the past, there's a slow rollout phase of the ETFs that I think maybe a lot of the crypto native industry doesn't fully understand. So can you kind of walk us through just that rollout phase and the timeline of the ETFs and what that actually looks like?
That's a really good point. So we were really fortunate to have as much money as that did come in. A lot of that were, I would say, early and high conviction retail that wanted to come in. But really what happens with ETFs is that there's a phase where the RIA world needs to go through an education. The ETFs need to be out there on the shelf and performing for a minimum of 6 months. So it's kind of funny, like crypto Twitter had this huge expectation of floodgates coming and going to the moon that was never really in the plans. So we outperformed with respect to our own expectation of what came in. But really, if you think about like a distribution pipe, starting at maybe like 5 to 10% maximum opening without the full marketing machines of all the asset managers, it's progressively opening over time. So we're really going to see the full effect of that distribution channel opening beginning to manifest over the course of the next year or two.
What is as we go up the stack of capital, you've got like retail, and then you've got maybe high net worth individuals, then maybe you have financial advisors and RIAs, maybe you have the funds, and then at the top of the stack there's the real capital allocators, the pensions, the sovereign wealth funds, folks like that. How deep have we penetrated? Maybe differently asked, at the top of the stack, the sovereigns and the pensions, how far away are they from really pushing into the industry?
Another great question. So we're really well penetrated in the high net worth. I mean, this region's probably the best representation globally of a really sophisticated and high impact bunch of users that get trading. They understand what a good experience is. So really important, like this Singapore in particular, super important for us. So high net worth is activated. Family offices are activated. Crypto hedge funds, obviously, activated. I would say traditional hedge funds we have a stat that says about 40% of the largest hedge funds in the world are activated, onboarded and activated on our platform. I would say corporates, small bits of activation here and there.
Corporates are the Fortune 500s, or the micro strategies buying the Bitcoin for the treasury.
Yeah, public, private. There's a few, obvious examples, but broadly, I think they're waiting. There's a couple gaming companies. There's MSTR. There's a few examples, but broadly, corporates have yet to be activated. Asset management globally has come through the form of the ETFs, but I'd say maybe about 30% activated in total. Then we're progressively working up to pensions. Pensions are the slowest to activate, so we're just at the very, very beginning of those activations. And then sovereign wealth, we've got a small handful, but we've got a lot of inquiry and a lot of investigation going on. So I have great expectation of what will come in the next probably two to 3 years.
Interesting. Okay, there are maybe 3 buckets of those. So on the sovereign side, the reason they could theoretically maybe buy Bitcoin is because it's a scarce commodity and they want to own a scarce commodity. The reason, so that's maybe on the sovereign side. The reason that a pension might buy Bitcoin, I would assume, is because all the pensions are underfunded and it's probably going to be a big crisis in the US at some point. What do you think about you said you used the word yet for the Fortune 5, for the corporates. Do you think that, what's the reason that a Fortune 500 or that a corporate would actually put Bitcoin on the balance sheet? Right, because they're not putting Apple shares on the balance sheet. They're not putting gold on the balance sheet.
I think you can find quite a lot in Michael Saylor's rationale for why Bitcoin should be in Treasury. I think it's good to take note of. It's a diversified asset. He's got a long rationale for that. I would say more broadly for crypto, broadly for corporates. I don't think Bitcoin in corporate treasury is going to be the unifying theme across all corporates. I do think, though, something a little bit less interesting but still very powerful is probably going to be all forms of stablecoin payments, and to facilitate intercompany payments, to facilitate customer engagement, to facilitate supply chain. And so we're at the super, super beginning of the investigations into that.
Okay. So I was doing a little bit of prep for this panel, for this conversation, and realized that you guys are the custodian on about 90% of the ETFs out there, both the Bitcoin ETFs and the Ethereum ETFs. Can you just give us a little insight into how you won that business and what that process looked like?
So it wasn't a moment-in-time decision, which is probably the most important thing to note. And BlackRock is one example. It was probably my first phone call, having joined Coinbase. And so it took a long while to really.
When was that? Was it 2021 or 2022?
That was 4.5 years ago.
Wow. Okay.
Okay, so we're talking about
4-year sales cycle.
4-year sales cycle.
Yeah.
So, and not everyone was activated at the time, but a lot of credible players in the space. We want there to be. The market needs to have credible alternatives, but. For what we built, my guess is the reason why we got awarded all those mandates is because we have a single platform where you have an experience where you can buy, sell, trade, store. You can do everything in one place. And we're a public company, and we have the track record of operating at scale with success. So it's really kind of a proud moment, but it was years and years and years in the making.
What about, I noticed so I keep saying the word crypto, you keep saying Bitcoin, and I'm curious how much of that is because a lot of the conversations that you have are around Bitcoin. And so maybe the question here is, I think there's been institutional demand for Bitcoin, there's an ETF. There's been institutional demand for Ethereum, there's an ETF. There's not a Solana ETF, there's not an Avalanche ETF. What does appetite beyond just Bitcoin and ETH look like?
Yeah, if I kept saying Bitcoin, I meant to say crypto. But
yeah, sure.
So
sure.
It's
I
definitely
didn't know that's a purposeful.
Yeah, it's a crypto conversation, for sure. And we have a very large and very loyal and very active crypto-first client base with their venture funds, crypto funds, et cetera, et cetera. I think it's kind of hard to encapsulate, a singular vision for crypto across a really diverse, set of segments. But I'll say Bitcoin seems like a little bit of a gateway. And so what we notice is that once clients are on our platform, usually the first thing they buy is Bitcoin. ETH usually comes next, and ETH usually lights the imagination on fire, and they begin to investigate and say, like, what's the difference between this protocol versus that? What are the different? What are companies building, and how is crypto going to disrupt, the broad swath of financial services? And like, what is this? So there's a natural curiosity that just builds, and that I feel like the dialogue gets richer and richer and richer.
Is it fair to say the conversation around Bitcoin is more of a digital gold, global macro hedge conversation, and the ETH conversation is more of a technology software platform, or?
It begins there.
Okay.
I think in the minds of people that have yet to really dive in, when you think of like the future of money, people gravitate towards ETH, but the people in the room supporting Bitcoin would take exception to that. But it begins that way, and then I think people begin to have a better and more precise understanding of the different activations over time.
Nice. I looked over your head and saw this panel is actually titled Coinbase's Strategic Vision, and I'm asking you about why an institution is buying ETH. So maybe I'll tie it back to Coinbase's strategic vision. How do you think about, you guys have a lot of international announcements and expansion stuff going on, and we're obviously in Singapore right now. What does it look, can you just maybe give us lay of the land and like what the next 12 months could look like?
Yeah, so dwelling a little bit first on that big picture strategy.
Yeah.
So probably the two most important things for us right now are expanding our footprint in the derivative market globally, both domestically and abroad, and then expanding internationally. So of course, we were started in the US. Naturally, we have a bigger share there than we do elsewhere. But we have, and have had for a while, the desire to expand globally. So what does that mean? We're going to continue to take the trusted and regulated route. We've launched INTX, which is our international perp exchange. And the key customer segment for that international expansion is actually Singapore. So it's actually this room, and we're trying hard to build share and trading activity and perps for the people in this room and in this region. So those are the two most important things: derivative market share and expanding our international footprint.
And Singapore is the key market of the international markets you're expanding to?
It is, and Singapore for us is also the hub for all of Asia-Pac for us as well.
Why is that? Why not Hong Kong or somewhere else?
We've had engagement in different places. We've observed that Singapore seems to have a bigger and more active and more consistent and more sophisticated user set so far.
Nice.
We struggle to get as much momentum as we would first hope a couple years ago in Japan, and we've got good engagement in Hong Kong too, but this is our choice of where we should serve the region from.
Nice, that's cool. What about derivatives? Why do you guys feel so confident? I met the guy who's running the derivatives business, and I'm just curious why you guys feel so confident. I don't know if it's a crowded market, but it's a tough market to play in. Why do you guys feel so confident you can win that market? Not in a year, not in 2 years, but over the long run.
Yeah, first of all, it's a big wallet. So just big picture perspective, if we want to be relevant to crypto users globally, we have to be in the perp market. That's where most of the liquidity is. And so it's a big wallet for us to penetrate. It's a highly competitive wallet as well. If you look at other actively traded markets as well, it seems like most of the liquidity tends to pile up in the derivative space. And so when we think through how we can be relevant, we want to be relevant across spot trading, financing, staking, all the things that you want to be able to do with crypto assets, including derivatives. Then the next version of that is going to get into cross-product margin financing and being more efficient with capital, getting the right amount of leverage. And most of all, continuing to be regulated and trusted in all the markets in which we operate. So as an example of that, we've now have a MiFID license, and that's going to allow us to actually offer derivatives to both retail and institutional all across the European space. So again, important.
There's probably two schools of thought when it comes to the impact of regulation on the industry. One school of thought might be, look, until we get better regulation, the industry is never going to advance, and there's a whole political conversation to be had that we're not going to have. But that's one school of thought, is this industry can't advance until there's really good regulation. The other school of thought is institutions will do dirty things for a little bit of yield and for good upside. How much do you think that regulations have either hampered crypto the last several months, and how big of impact do you think regulation will make on the next, I don't know, 1-2 years of crypto?
Well, couple observations. I would say the regulatory framework is different and operates at different speeds across everywhere, obviously. The US is, in many ways, lagged behind a lot of other markets. But crypto adoption for both consumer and institutional has ballooned over the past couple of years, notwithstanding there has not been great clarity in terms of regulation. It's certainly hampered and slowed down, I would say, institutional adoption as people are waiting for clarity, waiting to say, should we or shouldn't we? If we do, how? But what I would say, it feels like crypto is an unstoppable force. And that's, even with the backdrop in the US of a not particularly friendly regulatory environment, the world's largest asset managers went forward and kind of brought that, made that product come to be. I think that's a good indication of collectively what the world thinks of the future of crypto. And its ability to disrupt financial services and to disrupt all sorts of industry. And so with that big of a force and that much momentum going into it, I kind of maybe naively believe that regulation is going to be forced to become more clear. And as and when it does, it's going to continue to have other waves of capital and engagement propelling crypto further.
I tend to agree with you. I want to go back to something you said at the beginning of the conversation about like the timeline of activations. So I think one thing, can you just explain to us how it actually works with, okay, so you guys are the custodian on something like a BlackRock ETF, and then the BlackRock ETF goes onto Charles Schwab's platform, and then Schwab has a whole sales team that is responsible for pushing it. How do you think about what Coinbase's, like you guys are sitting at the bottom of that stack right there. So how do you think about what your team's or Coinbase's role is in educating and activating some of those brokerages? Do you play a role, or it's like, look, at that point, it's on the ETFs to educate them?
For many years, we've been playing that role and advocating and then going out and trying to do introduction and crypto academies and all sorts of things. I think our strategy is to say, let's have a platform, let's invite in people, that those that are interested, you can go directly on that platform. Great. The next best thing is then to position Coinbase in a way that it can open up distribution channels, which is what you're talking about with BlackRock and all the other asset management. That opens up RIA channels as well, private banking channels. The third part of that is really to offer up the infrastructure that we've created to support all those things and offer that everything as a service. And so that's probably the next phase. And so everyone that is a late entrant or has yet to come into the space should think of us as an opportunity for us to act as a sub-custodian to their own offerings, right? Wallet as a service, staking as a service, custody as a service. And that's one of the visions that I think Brian's got for the CDP platform.
Yeah. I'm getting the signal that I have to start, we have to wrap this up. But sorry, maybe I'll finish with one question, which is, I think a lot of people in this room spend a lot of time on crypto Twitter, and we're scrolling all day. You're actually in the room with a lot of these institutional folks. What is maybe the most misunderstood thing about the institutional interest in crypto that we, as the people scrolling all day, could never get from Twitter that you get because you're in the room?
So if I had, I'm thinking about that, I guess I would say that the most misunderstood thing would be the fact that institutions' engagement doesn't ebb and flow as much as it does as everyone thinks on price.
Okay.
And so you have a bad week, and all of a sudden everyone's in a really bad mood, and things are going to hell. The other thing that's misunderstood is just the consistency with which the institutions continue to plow forward. Teams of people, real due diligence, and even with the ebbs and flows of markets up and down, we talked like a steady path up and to the right of institutional engagement. And that's not something that week to week and month to month, and we talked about like a soft summer in terms of price action. That by itself is not dissuading the sort of unstoppable force of institutional adoption.
Up and to the right, institutions, unstoppable force. Good words to end it on.
All right,
Thanks a lot, Brett.